Hi, this is Steve, and welcome to another edition of the World of Global Equity Timing. Today, we're talking about what I think is going to be the trade of the century. It's going to be in gold, whether you buy futures, whether you buy an ETF. It is going to be one hell of a ride up. And so we're going to talk about that now, and let's get right to the charts. We're going to start with the big picture in gold. This is a monthly chart that we're looking at. This is a logarithmic chart, so the moves at smaller levels equal the moves up at higher levels in terms of percentages. So you can see the move in much clearer detail, especially at the lower levels. Well, the big move of the 20th century came, or I guess the 21st century, came in gold starting on this chart in 2002, and a move that went from the 300 area clear on up to the 1900 area. That was a 650% gain over a number of years, and the next move up, I feel, will be even larger. Why will that happen? Well, we have some very strong fundamental reasons why that's going to happen. The reasons for gold fever? Well, all currencies are being destroyed by governments around the world. They're doing that by printing money to finance the quantitative easing, which you probably have heard about. Another subtler reason is to destroy debts. There's so much debt in the world that one easy way to basically destroy the debt and destroy the value of the debt is to inflate a currency. Another reason why to have gold fever, governments want to finance social programs, and they're not going to do it with taxes. They're going to do it through simply creating electronic entries in banks and paying for the social programs rather than taxing. The result of that is going to be tremendous inflation. Part of financing social programs, it's probably coming in the 2020s, will be MMT, modern monetary theory, which is just another way for governments to steal money, hard-earned money from its citizens. They'll also use another reason for gold fever and why currencies are being destroyed. There's bailing out of banks. Currently, the Federal Reserve is using $1 trillion of new money earmarked simply to finance banks and hedge funds through something called repos. That's the bottom line. Those are the beneficiaries of the repo market. Why else will we have gold fever? Well, they'll continue to destroy currencies and create gold fever, that is the governments, because the Federal Reserve and central governments around the world are trying to keep the debt bubble from collapsing. The only way to keep the huge debt bubble from collapsing is to create more debt, is to create more currency, and that's how that is done, is through currency creation to keep the deep depression at bay. Whether they'll win in the end, we don't know. Probably not. But they're going to keep that game going for as long as they can. And finally, as I previously mentioned, it's kind of a repeat of financing social programs. They'll finance government through deficits, and they'll do it through printing money rather than raising taxes. Okay, let's look at the big picture now that let's look at the big picture on the charts now that we have seen the big picture as to why gold will have a huge move up in the 2020s. Well, if we look at the price structure, there's an Elliott wave formation. We occasionally talk about Elliott waves, and for looking at the really big picture of the markets is very, very useful. We had a wave one up, which, as we talked about, was a 650% gain. Then we had a huge consolidation, and it looks like we're still in correction mode of an A, which is a move up, a B, which is the top of a move, and then a zigzag down to a C. So it kind of goes A, B, C, and the correction ends after a decline, a rally, and another decline. And 2 is an Elliott wave formation, which suggests that once this wave is complete, this down wave is complete, the big wave up in Elliott wave terms will be a wave 3. And I'm saying that it'll be a 1,300% gain from the low of wave 2, and basically it's basically double the gain that occurred in wave 1. Wave 3s are always bigger than the tops of wave 1s. Therefore, if we just double the move up, instead of a 650% gain, we say it's going to be a 1,300% gain. We're looking at a projection of 14,000 from perhaps in the area of 1,000 to 1,050, clear on up to 14,000. It'll be a huge, huge move. Well, it's going to be very profitable if you're trading with using our Atom buy-sell engine, and the reason why it'll be extra profitable is the first wave up generated lots of profits, and we'll look at that as well on weekly bars, monthly bars, and daily bars. So stay tuned. Part 2 of this presentation is coming up. Hope you enjoyed this particular presentation of the trade of the century. Until then, good timing, good trading, and good day.